Welcome. You're on the Fringe show. I'm your host, Tatiana Zalan, and I go live every Friday, Dubai time at 2 p.m. The Fringe helps you to navigate the rapidly changing world and increase the odds of your success. Here we talk about technology, startups, entrepreneurs, and mental models of successful people so that you too can take advantage of the opportunities in the new digital world. It's a 17th episode of the Fringe show, and today we're going to talk about a very interesting, very intriguing project on blockchain, which is Diem Association. Diem used to be known as Libra, and it's a project that Facebook has got a very close association with. So we'll look at a very brief history of the project. It's a new project that only started just over 2 years ago. We'll look at its goals and objectives, maybe vision and mission, participants, how it will work, and what it means for you, for me and you, and society at large, because Facebook is a very large company, a very significant player in social media, and it shapes our lives, whether you like it or not. Let me remind you here, guys, that it's a live show, and so please allow StreamYard and Facebook to identify you so that I can have a look at who is commenting. Now, a disclaimer before we go any further. I'm not your financial advisor, don't have financial background. It's not investment advice, what I'm going to talk about here. And this show is for informational and educational purposes only. And I will be using a lot of quotes, and I'm very well prepared here. As usual, have some key statistics here with me, and one academic article that I will be using extensively, as well as some of the documentation, such as white papers that are only provided, it's all in the public domain, by Diem Association. Now, let me start with a brief history of Diem. But before we do that, what is Diem? Diem is a private, centralized digital currency. It's very different from decentralized digital currencies like Bitcoin or Ethereum, and it's different from central bank digital currencies. It's a stable coin, and I have a previous show where I talk about stable coins, what they are and what they mean for us. I also have a show about CBDCs, central bank digital currencies. In fact, my previous show is about CBDCs. So really, to understand the context, maybe you can go and watch these shows as well. Unlike decentralized crypto, private digital currencies like Diem do not offer anonymity, and that's a very important point here. And one of the questions that we will be asking ourselves, well, if it's a stable coin, is it going to be a competitor to either decentralized cryptocurrencies or maybe central bank digital currencies as well? And central bank digital currencies, at least in theory, are public money, so very different. Let me talk a little bit about the brief history of Diem, as well as some of the key players. This project was first announced in June 2019, and everybody in the crypto community was paying a lot of attention to it. And it was announced as a single global currency backed by reserved assets. And because of that, it was perceived as a threat by many, many regulators worldwide. And there was a bit of slapping the wrists, and now a lot of international regulators scrutiny. And Diem was revised initially to include a basket of single currency fiat-pegged stablecoins in addition to its multi-currency coin XDM. I will be talking about these issues further on, how the blockchain works, how tokens work, but let me just talk about the history at the beginning. And since then, since June 2019, the project acquired and lost many partners. It scaled back its ambitions. First, it's moved to Switzerland, then it moved back to the US. In June 2019, it also announced that it formed a new special subsidiary called Libra, which has since then changed its name to Novi, and that's to develop the front-end infrastructure for accessing Diem. So it's for you and us as users of Diem to see how we can interact with Diem. And the start was as usual, a digital wallet that will be integrated into probably all of Facebook owned apps, or maybe they change these plans. We don't know. Novi itself as a company is led by David Marcus, and David Marcus used to be head of this project when it was kind of still a project within Facebook, and now he's heading it. Marcus is very well known in the industry. He used to be a VP, vice president of for PayPal, and later on he became the company's president. He also founded a number of companies, including a mobile payments company called Zong. So he clearly is very well positioned for this role. In May 2020, the Diem Association appointed Stuart Levi, or Levy maybe, I'm not sure how to pronounce his name, as its first CEO. And he was previously chief legal officer with HSBC and previously worked for the administration of both George W. Bush and Barack Obama as Undersecretary for Terrorism and Financial Intelligence in the Treasury Department. He certainly has got a very interesting background. In December 2020, the project was rebranded as Libra, so from Libra to Diem, and that Diem means day, so it represented a new day for the project. One of the people who is very closely associated with it, he's the mastermind and also chief economist of the Diem Association, is Christian Catalani. Christian Catalani is an academic as well, and I follow his academic work. He's written extensively on blockchain. The initial vision of Libra, according to him, was kind of naive, and the project co-creator, he as project co-creator said that at one of the recent conferences. It's a very famous conference, Consensus, which is held every year. That was in 2021, this year. But Christian Catalini, as the chief economist of the Diem Association now, said that the creators have learned very much from the mistakes of the past, and Diem is going to be a success in the long term. Now, let's talk a little bit about Diem's goals and objectives. What are they trying to do? And that's straight from their white paper, and I'm going to read out a couple of things to you. Just bear with me. We need to understand the context until we get into kind of more interesting and juicy bits. Diem's goals and objectives are to build a trusted and innovative financial network that empowers people and businesses around the world, provide people everywhere access to safe and affordable financial services so people everywhere can have better lives. And they go into a little bit of detail there. Our goal was to establish a collaborative dialogue early in the journey. They're still talking about Libra here. We have worked with regulators, central bankers, elected officials, and various stakeholders around the world to determine the best way to marry blockchain technology with accepted regulatory frameworks. So they're emphasizing here that it was all in consultation with the regulators. Our objective is for the Libra payment system to integrate smoothly with local monetary and macroprudential policies and complement existing currencies by enabling new functionality, drastically reducing costs, and fostering financial inclusion. So they are into financial inclusion and clearly working on lowering transaction costs. They also adhere that moving money around globally and in compliant way should be as easy and cost effective as, and even safer and more secure than sending a message or sharing a photo, no matter where you are, what you do, or how much you earn. So that will probably lower barriers to innovation for other entrants, people who are will be working with the Diem Association. other things that they also mentioned in this white paper is that the Libra project is still somehow referred to it as Libra, but although they Diem, will be made up of several parts that work together to create a more inclusive financial system. So there are more into financial inclusion, as you can see, at least this is what they're saying, offering single currency stable coins in addition to the multi-currency coin, enhancing the safety of the Libra payment system with a robust compliance framework, foregoing the future transition to a permissionless system while maintaining its key economic properties and building strong protections into the design of the Libra reserve. So Facebook has promoted Libra as having a new level of interoperability that is not matched by existing cryptocurrency products. And the value proposition here for the consumers from their documents is clearly that Libra hopes to offer a more stable and less costly alternative to existing currencies through lowering transaction costs for all consumers, particularly in developing economies. And nobody will argue that some of the payment systems, particularly in developing economies and in developed as well, are not very efficient. And they also say that in addition, an additional long-term goal for the association is to develop and promote an open identity standard. And this is what they're saying here. We believe that decentralized and portable digital identity is a prerequisite for financial inclusion and competition. So we will get back to this very important idea of digital identity. And digital identity, as an aside, has been really the holy grail for a lot of cryptocurrency projects. And as far as I know, decentralized cryptocurrency projects, and as far as I know, not many projects succeeded, or actually we haven't seen any usage, so I'm not sure how we can say that they have been successful in any way. So maybe Diem will be more successful than all these others. And probably what's interesting about Diem, of course, it's the only current digital currency project that has a user base which is in the billions globally, and that involves very strong companies and other potential high-tech companies. Now, let's have a look here at the technology and the blockchain and tokens and how it will all work. So in order to accomplish all these ambitious goals and financial inclusion, maybe providing standard for digital identity, Diem is building a new blockchain, which is called Diem blockchain, and it relies on Move. Move is a newly created smart contracts language, and it's designed to prevent all sorts of digital assets from being cloned. Diem won't have fixed supply, and its single currency stable coins will be minted and burned by Diem as needed, depending on the market demand. And each token will be backed by a reserve of liquid assets, and at least 80% of these assets, as they say, will be short-term government securities, and the remaining 20% will consist of cash. It intends to launch a series of stable coins as well that form the backbone of the Internet of Money, as they call it, including tokens pegged to the US dollar, maybe pegged to the euro, to the British pound, and to the Singapore dollar. So that's kind of the intention. And in order for the project will also have multi-currency token, which I mentioned before. The ticker for the token is XDM, and it's a composite of all these single currency tokens. XDM will be managed through a smart contract that contributes or rather combines all these single currency stable coins based on a predetermined fixed nominal weight. So it will be some kind of a weighted stable coin. And that, as they say, that in itself may result in XDM being or fluctuating rather in relation to local currencies. Now, what about the consensus mechanism, which is at the heart of everything that we do on blockchain? How do we know the state of the system, which is what consensus does? The Diem network will be secured using a different form of consensus. It's not going to be proof of work or proof of stake, as, for example, in Bitcoin or Ethereum or Polkadot. They call it, and it's BFT, Byzantine Fault Tolerance Consensus. And under this consensus, 2/3 of all the validators must agree on the transaction, that the transaction is accurate. And so then and only then it can be added to the blockchain. The validator nodes, not surprisingly, will be operated by the Diem association members. The Diem network also has a second layer made of publicly operated full nodes, and they will revalidate all these transactions when synchronizing the blockchain's current state. The protocol of the Diem blockchain is called Diem Core, and it's open source. So meaning that anyone will be able to independently audit its safety and security. And I think it's a pretty good thing to have for a private digital currency. Now, who are the participants in Diem who are really members of this association? When the association first started, there was a plethora of participants. There were credit card companies, MasterCard and Visa joined in. Then there were payment service providers, PayPal and Mercado and Zappo and Coinbase. Telecommunications companies like Vodafone joined in. Very prominent VCs from Silicon Valley and from beyond, like Andreessen Horowitz and USV, Thrive Capital were also part of it. And a lot of non-profit and non-government organizations such as Women's World Banking and Kiva. But after this less than enthusiastic response from many regulators worldwide, many of those participants, initial members, retracted from the association. They left. PayPal and Visa and MasterCard and Vodafone, eBay, they're all retracted. Now, as of now, it's 26 members altogether, private companies and not-for-profit organizations as well. How does it work? Each of the members, because it's membership-based, is required to pay a fee. The fee is currently $10 million. And because of that, a lot of their business plan is centered on attracting more and more members into the association. And also ensuring, of course, that the existing members will renew their involvement in the association. It hopes to encourage a very open application process, which means that potential members will compete amongst each other for a very limited number of membership seats. Now let's have a look at a little bit of a closer, in-depth look at how it will all work. And most of this information is coming from Catalini, who is co-inventor of the Diem project and chief economist, sorry. So what he's clearly saying in a lot of interviews is that the project is willing to serve as almost like a placeholder for the digital dollar, a US dollar-backed central bank digital currency. And again, I can refer you to my last show when I talk about central bank digital currencies. This is what he's saying in one particular interview. What we're really suggesting is more of a public-private partnership. We see this almost like a temporary exercise where issuers like Silvergate, in collaboration with Diem, will be issuing a Diem dollar. But the moment here is a CBDC. We're the only issue of a stablecoin, to my knowledge, that committed publicly to phasing out our own token and replacing it with a CBDC. And Catalini himself views clearly the evolution of the US financial system as a technology stack. I'm sorry. So the US financial system, according to him, is evolving like a technology stack where CBDCs will serve as a base layer and Diem as a payment network that will enable use cases and other applications to be built on what the public sector will deploy. He's also saying that we'll have to work over time to develop better identity standards. It's very difficult to differentiate a good user from a bad actor. So our work probably will take multiple years to unfold. I think that what they're talking about really here is building the rails for the CBDC. And it will probably put Diem, the Diem Association, in direct competition with other payment providers, like, for example, PayPal and MasterCard and Visa, who also want to have a bit of a cut in the pie around central bank digital currencies. And I wonder whether this is the reason why all these big payment providers have withdrawn. Initially, they were part of Libra, but they're not part of the Diem Association. And if you look at the numbers, the statistics and the users that Facebook has, Facebook now is the largest social media platform globally. It has 2.85 billion monthly active users worldwide, and that's followed by YouTube, which is 2.3 billion, and WhatsApp. WhatsApp is, of course, a digital asset, digital property of Facebook. That's more than 2 billion monthly active users. Then comes Facebook Messenger, then comes WeChat and Instagram, also Facebook's. That's more than 1 billion monthly active users. So it's really a lot of users, and that's the only project in the blockchain space which has that kind of reach, with exception. Bitcoin is a lot less, of course. And Catalina was also asked, what are the kind of the differentiating points? What are the things that distinguish Diem's stablecoin from all the other stablecoins, like Tether, like CBDCs, like USDC, like maybe some of the algorithmic stablecoins as well. And according to Catalini himself, the mainstream stablecoins today are all driven by DeFi, decentralized finance. I also have a show about DeFi, so if you're interested, you are certainly advised to have a look at it. Diem is more for merchants, for small and medium enterprises, and of course for normal users like you and me. And what it does, it provides payments and transactions at a very low cost. So that's different. What differentiates them from DeFi and other stable coins. Now, another interesting aspect on the Diem Association is how Libra or Diem will make money. And here we need to look at some of the public documents. In July 2019, there was a US House of Representative Financial Services Committee sitting where Marcus, the head of the project then at Facebook, was invited to explain how Facebook is going to make money from Libra. And this is what he said. He said that Libra, or rather Facebook, will benefit from Libra in two ways. Firstly, they have the 90 million businesses on Facebook platform, and they will be able to make transactions with one another. And this the increased commerce on the platform would help all these small businesses expand and ultimately spend more money on Facebook ads, which makes sense because this is how Facebook makes money, through ads. But also, more importantly, he also added that Facebook will offer more services and partnerships with banks and other organizations from which it would expect to make money. And that's the second business stream, is where Facebook will become, in effect, the authenticated provider for many more businesses. There is a wonderful article about Libra. It's a little bit old, so it's maybe it's 2019, maybe it's 2020, because it's still about Libra, and is it really about money? The article is in the public domain. You can download it. It's by Valerie Kahn and Geoffrey Goodall. Valerie Kahn is vice president of the Digital Equity Association, and Geoffrey Goodall from the Center for Blockchain Technologies at the University College London. And they, according to them, what this will do, they're becoming the authentication provider for many businesses, is this would leverage Facebook's position as a commercial digital identity provider. And what does this mean? What are the implications of that? Why is such a big deal? Well, because as we exist now on the internet, we have different channels. Some of them are online and some of them are offline. And all these public and private companies build up numerous identities for us, their users. And in time, we're broken into very different silos. We become different persons on each of the channels. On some channels, we're represented by an email ID, on other channels by device ID, and maybe on customer login, and so on and so forth. But for reliable authentication, the service provider will need to reestablish significant amount and sufficient amount, rather, even of information about the user. And with all these big data analytics, data brokers can acquire information through a variety of channels. Facebook, probably it's not surprising for you, but Facebook ranks among the most preeminent data brokers. The company has got multiple data points about us, its users, and potentially across many different apps. There was an article in the Washington Post some time ago, and it was called The Intersect. It was in 2016, to be exact. And then they were saying, that's 4 years or 5 years ago, that Facebook was collecting something like 100 data points on us to ensure that their targeted ads are useful and relevant. They will collect all sorts of information like your age, ethnicity, all the demographics, your on-site activities, such as the pages that you like, or the ads you click on, your device, what's the mobile that you're using, and also sometimes the type of internet connection. What is also interesting that Facebook collaborates with the real power brokers of the world, some companies that you probably never heard of, even companies like Experian, Axiom, and Epsilon. Who are these companies? They are major data brokers. And that's if data is power, and data, as they say, is the new oil. So these companies have a lot of oil and a lot of data on us. And in some cases, even offline data can be added to complete the picture. There is an interesting statement that Mark Zuckerberg made in 2009, and this is what he said: "You have one identity. The days of you having a different image for your work friends or co-workers and for the other people you know are probably coming to an end pretty quickly. Having two identities for yourself is an example of a lack of integrity," according to Mark Zuckerberg. Mark Zuckerberg also added that the level of transparency the world has now won't support having two identities for a person. So what Facebook is trying to do is to re-identify, and that's according to this article, re-identify the fragmented online information and linking the data back to one unitary person that can be targeted and profiled. And this is typically referred in computer science and big data science as record linking or entity resolution, when there is a task of finding records in a data set that refer to all the same identity, and in this case, our digital identity across different data sources, and often through a common identifier. And this common identifier can be a phone number, it can be a national ID, or it can be a date of birth. And according to this Well, wonderful article. The linking forces individuals into a perpetual tracking mechanism that will create the transparent citizen that Mark Zuckerberg apparently talks about. There is a law professor at George Washington University, Daniel Solove, and he argues, please listen to that, that's very important. In the individual case, it might be innocuous, say the fact that I like Coke and not Pepsi. But when you put together pieces of information, it becomes different. When you have a record of everything you bought over the years, you can make inferences about your health, financial situation, and interests. So it seems like some participants in this association have been waiting for Facebook to fully enter the market as an authentication provider at the level of accuracy and trustworthiness that is required for financial institutions. Facebook clearly has positioned itself as the provider of the app that will provide this authentication of us users, and it will combine all the different identities that are sitting now in silos all across the networks, the digital networks, into one identity, and that will pass through Facebook's system. And I want to quote this article again. That's a direct quote from Khan and Goodall. This is what they're saying, and I would really want you to pay attention to this. I think it's terribly important. We submit that it would be wise not only to consider the requirements put forward to enable trusted digital financial services, but also to exercise particular vigilance when addressing the question of who a person is in the digital world, acknowledging that in the offline world, identity is a sovereign right traditionally only controlled by governments. Handing this right over to a handful of selected private partners with a revenue-driven target could lead to biased decision-making and illegitimate gatekeepers for the sharing of information, a mechanism for using incentives, punishments, temptation, and fear to control the behaviors of population cheaply and at scale. A mix of Huxley's Brave New World and Orwell's 1984. So this all begs the big question: why is Facebook and Diem assuming the functions of sovereign governments in the online world? And this is a question that I invite you to ponder for yourself. So what are some of the key lessons here, some of the key takeaways? Clearly, for me at least, this is how I see it. I may be wrong, so do your own research. But it looks like Diem is paving way and creating financial rails for central bank digital currencies. And what do you think? I would like really for you to ponder on that too. Is Diem association empowering billions of people on the planet, businesses and the public, with cheaper transactions? Or, as some commentators and academics like Han and Goodall would suggest, is Facebook and Diem are positioning themselves somehow for privileged access to high assurance digital identity information, in effect encroaching on the role of sovereign national governments? What do you think? I would be really interested to see your opinion on that. Well, this is it, and thank you for joining today. I shall see you in the Fringe next week, Friday at 2 p.m. Dubai time. And now it's time for some music.